This is Alan Bush with ADMIS. In the stock index futures, looks like we are putting in a pretty good performance so far this morning, even though we did have retail sales coming in with an increase but less than what was anticipated. So for the most part, stock indices ignoring some bearish news, which is a sign of strength. Also, we do have Janet Yellen's testimony before the Senate Banking Committee today. We're anticipating that this testimony will probably be well received by the markets. So I would look for further gains today in stock index futures, still looking for higher longer term. In the currency markets, we're seeing very sharp gains in the British pound. This after inflation numbers in the UK coming in quite a bit stronger than anticipated, up 1.9% on an annualized basis. That compares to the guess of up 1.6%. So this prompting calls for the Bank of England to raise interest rates sooner than some analysts had anticipated. Talk is now that the Bank of England could raise interest rates next February. Either way, the UK economy is likely to remain the strongest economy in Europe, which is why we continue to be bullish on the British pound. The euro currency, a bit of a different story now. Investor confidence has been weak in the eurozone. Some weak economic numbers this morning, so that putting a little pressure on the euro currency. Also, we are seeing the Australian dollar a little bit weaker. This after the Reserve Bank of Australia indicating that the record low 2.5% base rate that they have in Australia will probably continue for quite some time. So a rate increase appears to be delayed from the Reserve Bank of Australia. So that a little bit of a weaker fundamental for the Australian dollar. Longer term, still looking for lower in the dollar index, even though it's a little bit higher today. Lower in the yen and higher in the British pound. Over in the credit markets, seeing futures higher, even though we did have a little pressure in the overnight trade. Looked like some spec selling there. The retail sales report did come in on the weak side, so that is supportive. That helped futures to trade from lower on the day to now a little bit better. And I would expect follow-through gains in Treasuries, still thinking that the main trend is higher, still thinking that the Fed will raise rates later rather than sooner, with the consensus view calling for a rate increase in the middle of next year. We're thinking not until 2016. So look for higher across the board in Treasuries. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.